Welcome to On the Chain. This is Jeff here with co-host Chip. We have an exciting guest for you guys tonight, and we're going to introduce him here in a second. But the one thing that we're always talking about here, obviously, digital assets, cryptocurrency, and people are always trying to figure out where's the real world utility for your cryptocurrency. How about if you're able to take your crypto and buy real estate, not just buy real estate, because you can go out and buy real estate if you got, a couple $100,000 sitting around in a digital asset. But how about if you're able to take out a loan, a mortgage for your real estate and leverage your real estate to buy or to leverage your crypto to buy real estate? Chip, it excites me. I'm really excited about this. There's a company out there, Chip, called Milo. And we're going to bring in the CEO, Josip, to come and talk to us all about Milo. So, Chip, if you're ready to kick this thing off.
Yeah, let's go.
Welcome to On the Chain.
And there we are.
Right.
Well, without further ado, let's bring him in.
Let's bring him in.
There's Josip Rupena. How are you, Josip? And guess what? He's actually in our neighborhood. He's in our part of the world. You are coming to us live from
Brickell, Miami, South Florida.
Brickell in Miami.
Yeah.
If you guys know Miami,
South
you guys know
Florida
Brickell.
in the house.
South Florida in the house. This is a rare event in itself. But Joseph, thank you and welcome to On the Chain. Great to have you here. And of course, it's interesting with Milo and looking at the company, but maybe just for the viewership, could you just give a little intro on yourself, a little bit about your background? We'll start there.
Yeah, absolutely. It's a pleasure to be on the show. So a little bit of background on me. So I put in my time working at some large investment banks, Morgan Stanley, Goldman Sachs, and actually ran the trading arm of a family office. So we managed about $1 billion. So spent my time really sort of learning about markets, different asset classes, fixed income, equities, and crypto. Even though I really wasn't allowed to talk about crypto when I was at the firm, compliance would get upset at me about that. So, but definitely sort of put my time in and was able to sort of learn a lot through that experience and ultimately really come up with an idea around Milo and really trying to help people that I felt weren't being served well. And it was really predominantly around the wealth that they had. We really started off with international clients, and those clients wanting to buy real estate in the U.S. and they couldn't really do that because they didn't have a social security number, they didn't have income, they didn't pay taxes in the U.S. But I felt they had something else that was even better than that, and they had wealth, right? They really had the ability to come and really buy real estate, and I felt that there was an opportunity around that, and through the journey of Milo as a company, we felt that we could do that as well for individuals that had crypto, and that's really what brings me here today. So.
That's good stuff. I mean, and the funny part about that is, your background that led up to that. I know when you are in that space, and you're in the banking space, and of course we've had some other folks on the show as well, where that is frowned upon. They don't want you owning it. They don't want you speaking about it and talking about it. Do you think that that's going to change over time? I mean, do you think in that part of the world?
I think it already has.
Yeah.
I mean, I think the world is fundamentally different from sort of 2016, 2017, the acceptance of crypto. I think you can't really jump on Bloomberg without seeing an article around it. I know some of them are less bullish than others, but I think it's out there. I think it's mainstream. So.
Yeah, right on.
Yeah, this is it's really amazing. We always try to reference that within this space, just like, back in the .com era, there were a lot of companies that came about trying to build solutions, but they never had an actual problem. And one of the things that you're developing and building here and have active in a real world environment is a solution, to an existing problem, as you had mentioned. And one of those would be if you have people outside of the U.S. that want to come here and buy property. But, I see it here within the U.S. as well at some point to where you have the wealth, you want to buy property, you want to buy real estate, but you don't want to go through this arduous mortgage process and then really expose yourself and pay out, a high percentage of interest back to these banks and get locked in to, these long-term, committed kind of upside down type of relationships with the bank that they always seem to win at the end of the day. But if you're sitting on that wealth, it really it's an amazing, you know, it's an amazing direction that we're moving in. How are you seeing that development as you're kind of migrating from international, because you're in the US, but being able to help international customers? Are you seeing any progress in the US on how that could potentially look here?
Yeah, absolutely. I mean, I think if you think about our consumer set, we've got our international clients that are trying to buy real estate, and then we also have the individuals that have crypto wealth. And of the individuals that have crypto wealth, I would say the majority of that is individuals from the US. So most of the loans that we've closed and the individuals that we're working with, they're all US consumers. They just have a very strong desire to not want to sell their crypto wealth. And for the first time with our solution, they're able to go out and buy real estate and really sort of diversify their wealth. Now, what we're seeing is that there's a lot of really interesting mortgage related products out there. I think for some individuals, they might be more familiar with you know bridge products, private lending, hard money, right? These are tend to be fairly short term loans, sort of 1 to 2 year, and those are out there. And you would probably be shocked to sort of hear that a lot of the individuals that actually take on those products, they're not people that can't qualify for mortgages. They're people that just don't want to go through this really long process of going out and getting a mortgage or having to show their income or having to show their tax returns. So they do opt in to taking that short-term loan and paying 10, 11, or 12% interest. If you're an individual that is retired, but you have a very large stock portfolio and you have no income, it might be difficult for you to go out and get a mortgage as well. So there's a number of these really interesting, I would say, mispricings that happen in the market. And, we think that our product for these crypto consumers is a really good balance of all of those to solve their needs.
Yeah, it sounds amazing. So I wanted to step through this. So looking at your website here, so you can borrow up to $5 million on a 30-year loan, very similar to how most loans are structured here in the United States. And so then you use a custodian. So basically your custodian is either Gemini or Coinbase. Is it something that the consumer, the person purchasing chooses the custodian, or is that something that happens on the back end?
Yeah, it's something that happens on the back end. We have individuals that have their crypto in different locations. So sometimes it makes more sense to opt in to work with Coinbase, other times Gemini. We work with both. We have several other relationships as well. And, we're very mindful of who we transact with and our counterparts and custodian, and as well as who they're working with.
And so then here's one: finance up to 100%, no money required to qualify. So this is something that's very different right off the bat.
Yeah. One of the things we really wanted to solve for, is for people to not have to sell their crypto for a down payment, right? Not have to choose, not have to, potentially lose the upside of holding their crypto for the long term. What we found is that the majority of the individuals that we're working with, they've owned their Bitcoin or Ethereum for over 5 years. Some of them bought Bitcoin at $10 and $15. So, this thought of selling it just to buy real estate, it doesn't really compute for them. So we wanted to solve with that and sort of say, all right, well, you can come to us if you want to buy $1 million home. You're going to be able to post $1 million of Bitcoin with us and pledge it to us. You're going to continue to own it. And you're not going to have to basically bring any dollars to the table or liquidate any assets or really think about that. And it would be sort of this turnkey solution for you.
Well, the other thing too is you mentioned the magic word. Everybody says, well, why don't you just sell your crypto and then go ahead and buy it? But then you're going to trigger some kind of a tax event. You're going to go ahead and sell it and you're going to get hammered with taxes. This is a great way to continue to own your crypto and put it up as far as, collateral, especially. So it's basically 1-to-1. Is that right?
Yeah, so that's the way that we have the product structured today. And we felt that was an important level. We could definitely sort of look at a situation where we could accept less, but because of the volatility that you're seeing in crypto, and I think that was the right call when we came out with the product, is that we have yet to have to margin a consumer. Now I think for some of them potentially we're close, but we're being very transparent with them, clearly communicating to them. And many of them have already chose to deposit even more, right? Just to make sure that they're at a safe level. But but we're really thinking about it from a client and an experience level to make sure that we have enough, they have enough, and really we're not sort of dipping into those situations.
Right.
Yeah, and that was actually a question from Hans Loaded, and Hans Loaded actually he does some great editing work for us, and chops up some of these video sequences, and then we put them over as shorter segments. But that was his question also. What if the value of crypto leveraged goes down? So and what exactly does happen if you're not calling a margin on somebody, but what if someone did come in at the $60,000 point with Bitcoin, and now we're sitting at 20. What happens from that perspective? What are you guys doing? Does someone now have to come up with and balance out their account, or what is the next step?
Yeah, so there's a couple options. So, one would be to deposit more crypto, Bitcoin or ETH, to be able to sort of bring the balance of sort of their collateral up to an acceptable level. The other one would be to essentially pay down a portion of the loan and bring it back into also a similar tolerance level. And then for other individuals, it might be a situation where they might say, you know what, I'd like to just flatten out my loan. I'd like to sort of pay it off and make sure that I can continue to sort of keep a component of the loan, but essentially bring my exposure down. So we're giving them sort of a plan A, B, and C, making sure that that they have options.
So what happens, and typically these are going to be, high net worth individuals, but have you, thought about a situation, someone, over leverages themselves and now they're in an upside down position
Yeah.
on the property? What happens at that point?
Yeah, absolutely. And it's something that we think about that all the time, right? I think that if you think about lending as a whole, there's a situation where you really want to think about two things. You want to think about the person's ability to pay and their willingness to pay. In those situations, right, life circumstances could change, but if you have enough collateral and you have enough mechanisms in place and you structure the transaction right, then the individual will have enough solutions, right? Enough remedies. They could potentially sell the property, right? They could potentially sell some of the crypto. And ultimately, we want to be able to work with them so that we find a solution that makes sense for everyone. I think the last thing that we want is ever to foreclose on someone. Even the way that we structure our loans, we're not going out and selling your crypto and foreclosing on your house and taking everything, right? That's not the way this works. We really look at the crypto first. That's how we sort of protect the event of non-payment. As long as you continue to make payments, there's not going to be a foreclosure on the property or anything else like that. So,
Yeah.
We want to give them solutions.
And also, I think what a lot of people don't realize, I spent a lot of time in the default space, both on the foreclosure side and bankruptcy side. What people don't realize is that no lender ever wants to go through a foreclosure. First of all, it's expensive. I know there was a time back in the 2008, 2009, it could take up to 4 or 5 years to process that. I mean, it depends depends what kind of state you're in too. If you're dealing with a third party like in California, or you're dealing with a courthouse here in Florida, if it's a messy scenario, it can drag out and it doesn't create a win. No lending firm company wants to go through that. I don't think people realize that. It's like your last result is the last thing you want to do is go through that.
Absolutely.
Am I correct in that? Assuming that?
Absolutely. I mean, it takes, on average, 12 to 14 months to be able to foreclose. It can cost $50,000 or more in legal fees. And ultimately, all of that is really the borrower's equity that's being eroded right through this long-term foreclosure process, because all of those costs are really going to be absorbed by the borrower. So if you can alleviate some of that, which I think that by having liquid collateral like Bitcoin, where you can basically remedy with that before you actually have to go to the property, it's actually a much, much better situation for the borrower in the long run. And it's going to protect them and their equity that they've worked so hard for.
Yeah, and also the upside too. You had mentioned earlier in the conversation, if somebody, dealing with higher rates or different types of solutions. So what is the rates? I know we've seen the mortgage rates rise a little bit here in the U.S. They've gone up a little bit in the last probably 2-3 months. Yeah. So I've also seen it. So what kind of rates do you offer?
Yeah, so right now our rates are 6.95 for that one-to-one product. Mm-hmm. We started out with 5.95, so we've had to bring the rates up, given everything that's going on with interest rates. I think when we were looking at this back last year, right, rates were 2%, 3%, and 4%, and then that's sort of where we were modeling coming out with this. And now we're finding that rates just continue to go up, and every time the ink dries, the rates are higher. And I think we personally believe that rates are probably going to be a little bit higher by the end of the year. So for individuals that haven't refinanced, if they're looking at cashing out, it probably makes sense to do that sooner than later, because I think that rates are probably only going one way right now, and that's at least probably a point to 2 points higher.
Right.
Yeah. What is your primary, source? I don't know if it's something you can't disclose, but if obviously you're leveraging, monies from, somewhere. Someone's going to stake their Bitcoin or their XRP or whatever it is, and then you're going to hold that as collateral, but then you're pulling in asset or money from some source. So from your perspective, and I just keep thinking about the situation that we're in right now. So let's say someone has a $500,000 house. They put up X amount of collateral of digital asset based on the valuation today. Valuation goes down in half, but based on today's valuation, they're paying their $3,000 a month, for the money, and you're paying it based on a fixed interest rate on your end. And so even if now, I mean, you're going to find yourself kind of in a precarious position if their digital asset is valued at half, but if they're continuing to pay on that loan, I mean, you're liquid enough also and whole enough to continue paying on your end wherever you're funding from. So does that create, does that give you, it seems like to me it gives you a cushion, gives you some breathing room to allow those loans to kind of look for options, so you're not really in a high risk position to have to immediately go into a foreclosure. That's part of the question. The other part would be, are you also utilizing the property as collateral?
Yeah, so to answer the first, I think that as a company, we're very fortunate to have fantastic venture investors. So we've raised $24 million in equity capital, where the majority of that sits on our balance sheet. So and it allows us to go out and build technology, hire, right, and sort of continue to sort of innovate and build products like this. In addition to that, we have great debt and capital partners as well, that really believe in the quality of the assets that we go out and we originate. As a company, we've done over $100 million in loans for international customers. Performance on that has been incredibly strong. We've had no late payments with those consumers. So that gives a lot of conviction to the individuals that want to work with us, and allow us to go out and essentially not just go out and do a product where we can do a couple $1 million of loans, but that we can do hundreds of millions of dollars of these loans and potentially billions of dollars of these loans. And that's really how we've set up our business to be able to sort of scale. So what that means in terms of how we structure our loans, when we go out and we originate a loan, it's our asset, and then that really begins this long-term relationship, right? We're giving a 30-year mortgage. Us not being a bank, it's very difficult for us to say we're going to be able to keep an asset on our balance sheet for 30 years. Because the reality is that when you structure this loan, the customer can pay back whenever they want, but we can't essentially tell them, here, we'd like to, or we'd like you to pay back the loan, when you want. They have 30 years of time. So we have all of that exposure. So in order for this to really sort of work out, we need individuals that have long-term, very patient capital that really want this type of exposure. And that's who we align ourselves with on our back end. That allows us to really sort of scale out and do millions of dollars of these loans. We've already originated pretty close to sort of 8 figures of these loans. So, and we're going to continue to sort of scale out and grow, but that really is sort of the capital market strategy around that.
It's incredible. It's great. It's a really great strategy. And this right here kind of plays to it. Why do you trust Milo? Because there's no credit history. You don't need a social security number, which is an obstacle, especially for investors who don't live in the US. And it's built really around consumers that have this unique wealth. And you talk about people, because everyone's looking at the price of Bitcoin now, but probably the folks you're talking to are all in that same boat where they bought it in even the $2,000-3,000 range, $400 range. Some people bought it at $200 and sold it early. I'm not going to name anybody, but some people have done that. And so for them, they're sitting on, several $1 million, whatever. It's a great strategy. And again, I also see that this in the future. Yeah. Do you see it going beyond? Because right now I believe you have Bitcoin, Ethereum, and then what stable coins do you support at this moment?
So right now it's Bitcoin, Ethereum, and from a stablecoin perspective, it's USDC and Gemini dollar. And I think that those are sort of the securities and tokens, currencies, however you want to sort of describe them. That I think that there is some element of safe harbor where you sort of understand where you stand. I think that is, this element of when we go out and we lend to someone, we're giving them a 30-year mortgage, and they're basically pledging something to us. So we need to feel very comfortable with that asset, that it's going to be around for a longer period of time, and that our collateral that we've basically just used to go out and really sort of commit 100% of a purchase to is going to have some value. And that's really sort of why we think about those from a safety perspective. I think that over time, there are many others that will probably develop, but they're still in sort of early days of that life cycle. So, we have a lot of conviction in Bitcoin.
So here's another kind of interesting point, and it references taxes. So I've been thinking a lot about tax implication, and we just referenced a little while ago, and you don't want to sell your digital asset because now that becomes a taxable event. So you're selling your digital asset to go buy real estate. Even if you spend your digital asset, it becomes a taxable event. So in this this is something that Rob McDermott's bringing up too. He said, very interesting model. The tax implications are potentially interesting. I heard you guys comment on his family office experience, which makes sense here too. Wealth preservation strategies, I like it, and it makes a lot of sense. And we see a lot of that, with the higher net individuals, where they won't take their liquidity out of the bank. They always try to find a way to leverage. And so I like this notion as well. But the tax implication to me is really meaningful. And so, how does that kind of play into everything that you guys are doing?
Yeah, I think it's a major consideration for individuals, right? If you think about, why do individuals take out crypto-backed loans, right, and at fairly high interest rates? Well, it's because the interest rate to basically paying tax is significantly higher. So they're willing to sort of forego that and pay the higher interest. I think in this case, really sort of the beauty around our product is that it's allowing this consumer where we're finding that the majority of their net worth is tied up in something that is, very liquid but volatile, where you're seeing their net worth really gyrate up and down pretty significantly. If you essentially take some of that, you go out, you buy this investment property that is likely cash flowing, right? Where now you have really true yield, right? Because now you have someone paying rent and you have a property that hopefully is producing a really good income. You don't really need to step out into stablecoin and take sort of DeFi risk. You can actually have that real estate for you, that it's going to really be anchored to its price. So it actually does help stabilize people's net worth and their wealth. And hopefully, that property continues to appreciate. The crypto can be volatile, and hopefully that appreciates as well. But at least they know that they have something, and that crypto wealth really gave them the opportunity to just access this other really great wealth creation asset, which is real estate, on the basis of leverage. Right?
It's a very solid point. The whole idea of investing and growing real estate, people say, so you're not making that choice. Do I sell my crypto to get into real estate? Because people think it's a choice. You can actually have both. So if you wanted to do some investing, pick up some investment properties, and do you also do commercial too? If somebody wanted to buy like a small office and do a leases on that, do you have that?
Yeah. So we're doing 1 to 4 units. So if someone wants a duplex or a triplex or fourplex, we offer those. We are looking at some other property types, but right now we're focusing on those. And I think it's great when people are buying income producing properties, because that allows that income to essentially pay back the loan, right? I think that buying real estate, it's the leverage, right? The ability to put 5% down, 10% down, 20% down. And if the property appreciates 10% on your 10% cash, you just made 100% on your money, right? That's incredibly powerful. Now, do the math on a consumer not putting any money down, the tenant is paying for the mortgage essentially. So you put no money down, that 10%, let's say on $1 million property, $100,000 income. What's your return? It's an infinite return because you've actually contributed no dollars, right, to the transaction. So it's a really powerful wealth creating effect.
That's fantastic. Really is really opens up a lot of different opportunities for people, because a lot of times we've always had this conversation around off ramps. Where are the off ramps? You don't need an off ramp, and you're certainly don't need a taxable event. But then you're going to go ahead and create investments. And again, whether you live in the house, whether somebody else lives in the house, the opportunity is incredible, and you're still keeping your crypto. So I saw one of the questions in the chat where somebody was saying, well, this whole argument of not your keys, not your crypto, how is that dealt with as far as, there it is right there. Yeah. Not your keys, not your cheese. Is there any form of insurance on the crypto while it's in somebody else's custody?
Yeah, definitely. I mean, I think this is something when we were looking at custodians and counterparts and saying, did we want to run the risk of having our own wallet, right? Sort of cold storage on our side. Did we want to work with a counterpart? And, we looked at the space and we said, well, what are the largest companies that are most reputable in the space where we feel that they have best practices in place, where they have insurance, where they have these policies to guarantee sort of theft and cybersecurity, as well as very well capitalized, that they could withstand some type of shock. And I think that, when we looked at that, we found sort of Coinbase out there, right? Sort of Gemini, a couple other firms as well. And we felt that that was the right way of sort of mitigating around this risk. And in addition to that, they have insurance, they're regulated, they're audited, and so are we, right? So we have fidelity bonds and insurance bonds and surety bonds and all of these different types of security, as well as being licensed and regulated and audited. That's an important consideration. So, we want to align ourselves with other firms that are doing the same thing, and ultimately that'll protect us. And we want to do it with firms that have a presence here in the U.S. because we're lending here in the U.S. There's some interesting opportunities in Asia and other markets where you can potentially get more yield. You can potentially get a different type of risk profile. But for us, we're really concerned around making sure that this individual that gave us 10 Bitcoin, the moment he wants to pay back his loan to us, we're able to give him his 10 Bitcoin back.
Right on. And also too, it's great for you as far as an organization. You don't need the risk. It's a lot of risk to take on as well. So you want to better deal with a third party that's already regulated, licensed, insured. And I love the model. I think it's a fantastic model. How did you actually come up with this? So you spent a lot of time, like you said, with the Goldman Sachs and and the investment banks, and also managing $1 billion fund. But where do you start seeing that there's a problem, that you said these folks were underserved? Like, what was the impetus for ultimately what became Milo?
Yeah, it's a great question, and it's a longer story, right? I think when I started my career in 2006, 2007, a lot of these financial institutions were really about trying to create new products, right? Trying to figure out where was there an opportunity to serve a customer and potentially sort of add value. When I went back to those firms in 2016, it was very different. It was really, don't really try to innovate, really try to do the things that you're doing, try not to rock the boat, right? And really, sort of compliance and legal was really sort of running these firms. And, I felt when I went back into one of these large institutions, I felt that I wanted to innovate. I had started a company prior to that, and I felt that there were opportunities. And I was involved, sort of in the crypto space at that point in time. And I was looking at this world where individuals, I felt that the moment they would amass enough wealth, they would want to buy homes and art potentially. When NFTs came around last year, right? And they would want to sort of use that wealth, because having crypto is fantastic, but at some point you're going to want to do something with it, right? You're going to want to have the benefit of the value of it. And but I felt it was too early. I felt that at the time in 2017, the asset class as a whole, it wasn't large enough. And it really sort of came full circle last year when we were looking at a number of trends that were happening, right? The NFT movement that started happening, we started to see stable coins really sort of start to really generate a lot more interest in asset classes and allow people to essentially be sort of neutral in the crypto markets. And we started to ask our consumers, and we asked them, do you have Bitcoin? Do you have ETH? And we got a really interesting response from one of them. And they said, no. Well, why are you going to deny my loan? And that was really it. And we started sort of digging around and spent a lot of time with our attorneys. But it's been a long-term thinking that the world needs something like this. And we've been very, very excited that consumers are opening up and we're transacting and helping people with loans and really trying to continue to innovate with the product.
Now, what if somebody comes to you with a Bored Ape? They've got it appraised at $3.4 million. Do you envision in the future where somebody might be able to put up an NFT?
It's possible. I mean, I think that the framework that we decided to start with was really thinking about Bitcoin, Ethereum, sort of liquid collateral to be able to balance the illiquidity of real estate. I think that there is probably a world where we will think about that. Ultimately, you want to be able to have something that counterbalances that, right? So if that Bored Ape is fairly liquid, then maybe there is a benefit to it to be able to sort of combine it. But I think we'll see. We've definitely got them the request for that.
God, I bet. Yeah,
It's interesting. Are you looking at expanding to other digital assets? And there's been some commentary here on XRP and some of the other assets that seem to be expanding within the space. What are your thoughts outside of just Bitcoin and Ethereum?
Yeah, absolutely. We're always looking at it. I think a lot of it is really driven around what we're seeing from consumers. What are they asking us for, right? What are they reaching out? If we're seeing that there's an opportunity, then I think we're sort of diving in. I think that what we found though is that a lot of the interest from consumers is really around sort of Bitcoin and ETH and stablecoin. But I think that we're definitely sort of open to it.
I'll throw that question up, Jeff.
Yeah, there you go. There's another one from Tony Baggs. How do you compare to, let's say, Proppy?
Yeah, so I think what Proppy is doing with NFTs is fantastic, right? Natalia and her team over there, they're innovating as well. I think they did a transaction. I think that they're lining up to do more transactions. I think they're really focused on how does someone take possession and ownership of the property, where we're really trying to align ourselves and say, well, how do we help a consumer leverage their wealth to buy real estate? So I think it's fundamentally different. Now there might be a world where we collaborate to be able to help consumers and really sort of leverage that, because ultimately I think there's not enough of us innovating in this space for the size of the asset class. Real estate is massive. There's over $11 trillion of mortgages. There's over $37 trillion of residential real estate in this country. So it's really going to take a lot of us trying new things. Not all of it will work, but hopefully it helps the next person and the next idea, validate it. But there's a lot to do.
Yeah, it seems it's interesting. You're definitely addressing, the financial aspect of it, but I think you really hit onto a really important part, which is, not just protecting wealth, but building wealth. And you had mentioned acquiring rental property. So you're able to further leverage your sitting digital asset that it's not really doing much for you if it's just sitting as you watch it go up, watch it go down. So you get a little bit of stress, maybe some heart palpitation, as if you watch it. But if you're able to leverage it to buy the real estate, that's great. But now you're in the real estate. So if you can take it a step further, as you'd mentioned, and rent it, that to me, I mean, that just, now you've got, all sorts of benefit from your now stagnant crypto that's just sitting there and you're watching it, admiring it. And there are some websites for the life of me, I can't remember. I've been on it for a long time, but it allows you to find it. They help you find rental properties, and then they connect you with the property management. And so I think I see that kind of as a value added to what you guys are doing. So you have from the one side of it, it's like, hey, we're going to take your crypto that's sitting there. We're going to help you leverage it to buy real estate. But then the other side is, hey, I don't know where can I find real estate? I'm here in Florida. Maybe there's good opportunities here, but maybe the opportunities right now are in Missouri, or parts of Texas where the real estate prices might still be lower. I can get more bang for the buck. And, there's a lot of people migrating there. So maybe the rent prices are higher. Have you looked at that kind of an additional value added kind of plug in to where you get, where they're helping locate the properties and then plug in the property management to oversee that? It kind of, to me, it completes the whole circle.
Yeah, absolutely. I mean, I think that since we sort of announced the product and sort of took it live where people could either, apply for a loan or see what they could qualify for through a pre-approval, we've had thousands of individuals come in and apply, right? Hundreds of millions of dollars in pre-approval letters. So we are seeing that as an opportunity of how do we help people find properties that are more attractive. And you're absolutely right. North Carolina, Tennessee, these other locations, those properties just tend to cash flow more just because their basis is much lower. The income on the rental is not that much lower. The rental market's very, very strong. So we are looking at how do we potentially partner? How do we potentially offer that service? Because our business is not just Florida, right? It's national.
Mhm.
So we have to make sure that we align with ourselves with someone that has the ability to do that. But that would definitely help the flywheel and make sure that that we can help some of these people that really want to buy real estate, but they just really don't know where to start.
But I have to imagine that probably well, I want to guess where the better places might be, but where do you tend to see a lot of people purchasing? Because I know Jeff mentioned a few, but where do they, I mean, is Florida one of those places they might tend to like be buying in? Miami, maybe? I mean, it's also a hub, because I would imagine international people want to maybe like a New York, Miami, California, maybe even a Texas.
Yeah, Florida's definitely, I would say, sort of within the top three. Texas, top three. You look at some of the other states, and I think that you have individuals in California, but I think those individuals in California are definitely going east, right?
Yeah, right.
They're going to Utah, they're going to Vegas, they're going to Arizona, right? They're sort of pushing away and looking at those markets. So those markets are actually very, very strong. I think that there's this really interesting thought that because rates go up, housing prices are gonna collapse, and the reality is real estate prices really only started going up in the last couple of years. And if you look at sort of a longer trend, right, let's say over the last 10 years, home appreciation has been 8% on average year over year. If you look a little further back and you go 50 years out, well, there's really only been one time in history where we've actually had a pretty strong blip, and that was in 2009 during the financial crisis, which we all know how and why that happened.
Mhm.
So over the long run, I think that if you find good properties where people want to live, the reality is that people are going to want to rent those homes and they're going to want to move there. If you have good schools and good communities, those are generally good places where potentially the next generation is going to want to move in there. And those are really good things for price appreciation over time.
It's really good
That's
stuff.
awesome.
Yeah, go ahead. I
Yeah.
was going to
Here's
throw that
another
one
one
up.
from Rob. Rob's got some great questions in here as well. He said, "Can you speak to your market strategy? How are you planning to grow? Any growth metrics or projections that you can share?" And I think that's interesting. You alluded to one looking for, some partners that are out there in the market to work with. But what is your overall market strategy at this point?
I think for us, it's really to sort of align ourselves with other companies that are building and have the same mindset that we do. And that really is to help people create wealth, to help people diversify their crypto, continue to own it, and be able to sort of align ourselves with them. I think that there's a number of platforms out there that have a lot of consumers and may want to offer our product. So we want to be able to work and collaborate with them. This is an aspect where the more people know that this is an option, the more likely they're going to go out and transact. The more they transact, the more they diversify their wealth. And I think over the long run, we help more and more people be able to keep their wealth, not sell their crypto, which is fundamentally a good thing for the market. But we definitely want to collaborate. And I think that that's the objective, and we want to be part of the community.
Yeah, I think what you
I
said
love
right
that.
there was like really pivotal, is like diversify your wealth. And what a great way to do that. I mean, and people are always looking, and it's one of the reasons we love having you on here, is because the whole idea is that you're actually solving a real world problem. And I would imagine over the next 2-3 years, as you grow and as you start writing into that 8-figure plus 9-figure, get into that realm, you're going to definitely, what we're going to see is a lot more people entering that wealth sort of echelon. And as they enter that, they have this available to them, which is great. Because if you think about a product like this, it didn't exist. And you spoke to the fact that in 2017, we're in 2022. That's 5 years, makes a lot of difference. And despite all the naysayers out there, crypto's not going away. And 3 trillion is nothing compared to where it's heading. I mean, where do you see it ultimately going in the next 3 to 5 years, just if, from a personal opinion, where do you see crypto going as far as a market cap is concerned?
Yeah, I think that there's a fundamental shift in the generation around sort of millennials and other generations where part of their wealth is going to be crypto. And as crypto continues to grow, it's likely to become a significant portion of their wealth. And that's why a product like ours is essential, because unless you actually do get financial innovation, they're not going to be able to access the things that they want to purchase, like a home and like real estate. But over time, I do believe as well, these are scarce asset classes, right? It's not something that everyone is going to be able to get. So as time evolves and more people want to own it, those are generally very favorable trends for appreciation. If you create mechanisms where people don't have to sell, then they're likely to hold it. I've never sold anything, right? And many people that we work with, they've never sold anything either, and they are likely to not do it. An individual that came to us that bought Bitcoin very, very early, he said, I have no intention of ever selling it. This is going to my kids, and hopefully it's going to their kids. So I think there's a lot of that thinking, and I believe that over time we will see higher prices, and I think that that's good for everyone. And these are the moments that people say, well, if I only would have bought at these levels, if I only could have and should have and would have. Well, there's always that opportunity, right? You buy some, you don't regret it. If it goes lower, you buy some more, and if it goes higher, at least you have some, right? So
yeah, dollar cost average. And there's a lot of people in this community, people on the chain community, and I've never been interested in selling it. I'm not a trader of it. It's just like you would do any kind of an investment. I've sold a lot more stock, and I've never sold crypto. So or I might have moved it from one asset to a different asset, but not into that whole realm. And I don't know, Jeff, you had any other, did you have a question there?
I'm just looking at a lot of these comments here, and I think out of all the different comments, I think they could be long talking points, but here's an easy one from Adrian. Do many U.S. citizens buy property outside of the U.S. utilizing your platform?
So right now, all of the loans that we're doing are for properties in the U.S. We've definitely gotten the requests for many other countries around the world that want solutions. I think that that's the remarkable thing about crypto and Bitcoin as a whole. It is a global community. It's not just the U.S. In fact, there's probably many more people that own those assets around the world, more so than even in the U.S. So I think that the desire is there, and I think that at some point we'll definitely sort of explore it. But we really want to make sure that we get this product right, and we want to do it here in the U.S. first, and then we'll take it around the world.
Right on. Well, I mean, we're almost at time right here, and I wanted to thank you, Josip, for coming on the show. Milo is an exciting product to watch. MiloCredit.com is where you can find it. I threw it in the chat. Also down below, go ahead and follow Josip, follow Milo and Josip both on Twitter, and also go to the Milo website, which is down in the description. And is there something that we didn't cover here, Josip? Was there something that maybe you'd wish we asked a question, but we didn't get to it in this time?
Yeah, absolutely. I think that a lot of times we get the question around why do we ask for certain information, right, through our applications, and why do we need this, or why do I need to provide that? And I think that when we go out and we decide to do a loan, right, we're building this 30-year relationship with this consumer. So we need to basically run a process around that. A mortgage is not a crypto-backed loan where you're significantly over collateralizing that crypto-backed loan. And if you don't pay, I liquidate your asset, right? There is some level of underwriting the consumer and their ability to pay. And that really is not just because we want to do that, but when you are lending in mortgage, there is regulation, right? There is RESPA and TILA and Dodd-Frank and all of these things, which it's hard to imagine that there's so many of them that are out there.
Too many.
But it requires us as a lender, right, of capital to be bound by some of that. I think that what I would like everyone to know is that we're always thinking about how do we make this experience better, but we also have to make sure that we're around to be able to help that next consumer. But our intent is to make sure that we do good loans to great consumers and diversify their wealth. So,
well, excellent,
outstanding. I think it's a great way to wrap it up. I mean, this is we could talk about this for a long time. But definitely, respect, for you for coming on here on the chain. We've had a lot of great engagement here. A lot of our, old time listeners that are definitely, highly engaged in looking to diversify and leverage their asset holdings. And I think that's one thing that we can take away from this. And it really kind of resonates across the board when we look at a lot of the maximalism attitudes within the crypto space, where they become very Bitcoin centric or very XRP centric or Ethereum. So whatever, you have to look at a mechanism for preserving your own wealth and not get into the competitive nature of it. And I think you hit that part, right out of the park. It's all about diversification. And if you can utilize that asset and leverage it to get into another appreciating asset, which is real estate, that's even better. So appreciate you for delving into the space to build a platform to help support all those that are generating crypto wealth.
Absolutely. It's a pleasure to be on the show.
Yeah. Okay. So that's it, guys. Thank you for coming in. And if you're watching on the rewatch, you guys can go ahead and throw some questions there. We could always get them over to Josip as well if you didn't get a chance to ask him. A lot of great questions. Couldn't get to them all. But thank you, Josip Rupena, for coming on. Founder, CEO of Milo, based here right in our backyard in Miami, Florida. And thank you so much for coming on. If you could just hang out after on the green room once we stop going live. And then we'll do an exit. But everybody, thank you guys so much for joining us. Was a pleasure. Take care, guys. See you on the next one. Chip, Jeff, and Josip out.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.